The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. Bloodbath across Asia. Asian share markets plunged Monday as fears of a global trade war led investors to ramp up bets on the risk of recession and a U.S. rate cut as early as May. At the opening, Japan's Nikkei share average tumbled nearly 9%, while an index of Japanese bank stocks plunged as much as 17%. Taiwan stocks plummeted almost 10% in their first round of trading since U.S. President Donald Trump announced new import tariffs last week, with the head of the island stock exchange saying it would roll out more stabilization policies if needed. Shares in chipmaker TSMC and electronics maker Foxconn both fell nearly 10%, triggering the 10% circuit breaker in the Taiwan market. Hong Kong's Hang Seng was down 8% in early trade, while shares in online giants Alibaba and Tencent were down more than 8%. China's Shanghai Composite opened down 4.5%, alongside South Korea's benchmark Kospi. Later, the Korea Exchange said that a sidecar trading curve was activated on the Kospi at around 9 a.m., halting program trading for about 5 minutes. Bloomberg reports emerging market assets, including Asian currencies, sold off amid a flight to safety across markets as escalating trade tensions fueled risk-off sentiment. An index tracking the performance of regional currencies against the U.S. dollar slipped to a month's low, with the Philippine peso leading losses. The yuan also declined as the People's Bank of China set the reference rate at the weakest level since December. Gold prices fell to a more than 3-week low on Monday amid a wider market sell-off, continuing their retreat as investors dumped bullion to cover their losses in other trades. Oil tanked for a third straight day after Saudi Arabia slashed its flagship crude price by the most in more than 2 years and the escalating trade war. At least one analyst said elements of the current sell-offs are clearly justified and that we are in for an uncertain period.
I think elements of the sell-off are clearly justified, and I think there's two potential reasons for that. The first of those is the concern that, the global macroeconomic settings are going to worsen. We're going to be in a world of lower global growth, and we're going to be in a world of higher inflation for some economies. And I think the other reason why we're seeing such a strong market reaction is in part the policy uncertainty concern, because no one's crystal clear on where this is actually going to land in terms of the global trading arrangement.
Well, U.S. President Donald Trump denies intentionally fueling a market sell-off. As the market sell-off intensified, Trump was largely out of public view at his golf course, where he sent multiple defiant social media messages guaranteeing victory for the U.S. economy. Amid a trade war that has rattled investors and fed fears of a coming recession, Trump's team has characterized the market turbulence as an adjustment that would prove beneficial in the long run. He also gave no signs he will claw back on tariffs that wipe trillions of dollars from U.S. equities. Speaking from the Air Force One on Sunday, Trump compared tariffs to medicine when asked about markets.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world. Sustainable, we're not going to do it. Now we have hundreds of billions of dollars is pouring into our country on a monthly basis. It's pouring, it's already started because I put tariffs on. And eventually it's going to straighten out and our country will be solid and strong again. I don't think inflation is going to be a big deal because if you look at me, I took in hundreds of billions of dollars. This is not new to me. And we're the piggy bank. We have all the advantages. Forget markets for a second. We have all the advantages. We're going to straighten out. We're going to become a wealthy nation again. wealthy like never before. And
speaking to reporters aboard Air Force One, Trump said he would not make a deal unless the trade deficit with China is solved. He added that he has spoken to European and Asian leaders on the tariffs rolled out by his administration. More than 50 countries have reached out to the White House to begin trade talks as U.S. officials sought to defend sweeping new tariffs that have unleashed global turmoil. During an interview on ABC News this week, U.S. National Economic Council Director Kevin Hassett denied that the tariffs are part of a strategy by Trump to crash financial markets to pressure the U.S. Federal Reserve to cut interest rates. The top economic advisor to Trump also said there would be no political coercion of the central bank.
So but the president's allowed to have an opinion. Absolutely, the president's allowed to have an opinion. But there's not going to be any political coercion over the Fed, for sure. It is not a strategy for the markets to crash. It's a strategy to create a golden age in America for the American worker. That's his strategy. The data, we just got the data for last month and the month before. Both times manufacturing employment went up and auto employment went up. And again, we're looking at about 10,000 auto jobs, George. That's more than we got all of last year with Joe Biden. And if you thought consumers are going to pay that tax, then you should be puzzled about why it is that countries are upset about it.
Well, President Trump's new tariffs are larger than expected, and the economic fallout, including higher inflation and slower growth, likely will be as well. At a business journalist conference in Arlington, Virginia, Federal Reserve Chair Jerome Powell cautioned it was still too soon to know what the right response from the central bank ought to be.
I realize that the uncertainty is high, what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
Japan could lose $17 billion in car export potential in the U.S. following President Trump's decision to introduce 25% tariffs on the automotive sector. The International Trade Center said Slovakia, Japan, and Honduras are some of the countries highly exposed to U.S. tariffs on automotives. Japan may seek to diversify its export destinations for vehicles.
In light of these new tariffs, countries like Japan can try to diversify the export destinations for vehicles. Markets such as China, Germany, the Philippines, and Thailand together hold an unrealized export potential for Japanese vehicles that matches the estimated loss in the U.S. market.
Reuters reports duties on automotive parts imports to be launched on May 3rd cover more than $460 billion worth of imports of vehicles and auto parts imports annually. Thousands took to the streets of various cities in the U.S. and Europe over the weekend to protest against U.S. President Donald Trump and his policies. The Los Angeles protest was one of some 1,200 demonstrations that were expected to form the largest single day of protest against Trump and Musk since they launched a rapid-fire effort to overhaul government and expand presidential authority. Similar large crowds were also seen across New York, Dallas, Texas, Atlanta, Georgia, and Denver, Colorado.
The guy is completely out of control.
Some 20,000 people streamed into downtown Washington, D.C. as the protest got underway under gloomy skies and light rain, some wearing all black mourning clothes with veils and candles.
Watching my 403B evaporate in the last 2 days, and it's pretty hurtful to see minority history just being erased. It's pretty sickening.
Around 200 mostly American protesters opposing U.S. President Donald Trump gathered in central London. Several hundred protesters also turned out in Paris, Frankfurt, and Berlin against Trump, Musk, and their actions following a bruising week for markets after President unveiled global tariffs.
He's not thinking about people, he's thinking about his billionaire buddies.
That guy is, he's poison. He's a liar, he's a thief, he's a con man. He should be in prison.
Well, billionaire fund manager Bill Ackman, who endorsed Donald Trump's run for president, said the U.S. leader was losing the confidence of business leaders and should pause his trade war. Ackman recommended that Trump call a 90-day timeout to resolve trade issues via negotiation or risk business investment grinding to a halt, consumers closing their wallets, and the U.S. severely damaging its reputation with the rest of the world that will take years and potentially decades to rehabilitate. We have to pause for a few reminders. The biggest business stories from around the country and the market's closing data are up next. Keep it here on Business Brief, only on the Bilyonaryo News Channel. Welcome back to Business Brief. With a new loan initiative, the government is helping small businesses in the tourism sector take advantage of booming travel demand. Our correspondent Sujin Kim joins us on the line for details. Sujin, go ahead.
Yes, Raine. Trade Secretary Cristina Roque pesos in loans have been allocated for tourism MSMEs. The loans range from 10,000 to even millions, depending on the business's needs, under a new partnership between the Department of Trade and Industry and the Department of Tourism. She said the funds to be distributed through the Small Business Corporation, or SB Corp, will help tourism-related businesses expand and level up as travel demand continues to rise. Tourism Secretary Cristina Frasco said the agreement will open access for tourism MSMEs to DTI programs, including product marketing support. She emphasized that this DOT-DTI convergence will enhance initiatives such as the Philippine Experience Program and fuel the growth of shopping tourism, especially as the government begins implementing a VAT refund program for foreign tourists. Frasco cites the country's net trade surplus in tourism, a historic first in 15 years, as a sign of growing foreign spending in the Philippines. She believes this momentum can create massive opportunities for small businesses across tourism destinations. And those are our latest updates from Makati City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. Meanwhile, with millions of unsold condo units in the market, the National Housing Authority calls on developers to adjust prices, sparking hope for housing revival. Joan Manalo is on the line for that report. Joan.
Raine, the National Housing Authority says private developers can help address the oversupply of condominium units in the country by adjusting their prices. According to NHA General Manager Joe Bentay, the oversupply has mostly affected the mid-market segment, with many consumers choosing to hold off purchases and wait for prices to go down. Data from research firm Colliers shows that ready-for-occupancy condo units, which remained unsold in 2024, rose by 77%, amounting to a total value of $158 billion. Colliers also projects that it may take more than 8 years to completely absorb the current inventory. With this, TAI urges private developers to consider making profits slimmer to attract buyers, suggesting that lowering condo unit prices could help revive sales, as they are brought down to a more affordable level. Meanwhile, TAI shares that the NHA is open to adopting condo-type housing for its own projects to maximize space for beneficiaries. Currently, the agency has low-rise housing developments in Valenzuela and Malabon and is studying how to make units more spacious and comfortable. In addition, the NHA will soon launch a condonation program allowing beneficiaries to clear their obligations by waiving 100% of their penalties and 95% of interest on their principal loans. The condonation program will run from May 1 to October 31 this year. At present, over 1.2 million Filipinos are benefiting from the NHA projects nationwide. And the agency says that the challenge remains further in adapting new strategies to improve housing conditions for Filipinos. Reporting live from Quezon City, this is Joan Manalo. Back to you, Raine.
Thank you so much for that report, Joan Manalo. The Philippines has a golden opportunity to attract more semiconductor investments, but what will it take to get the right steps to secure them? Speaking to Bilyonaryo News Channel's Follow the Money, SAPI President Dan Lachica says the country is in a prime position to benefit from the global shift in supply chains, especially with companies looking for alternatives amid the U.S.-China trade war.
Well, whenever you have new investments, it kind of impacts two critical areas. One would be the new technology, which we kind of got delayed on because of the previous CREATE law. Now we're seeing a resurrection of interest in the Philippines with CREATE More. And the other beneficial impact on that would be on employment. Obviously, when you have a new factory, you bring in the new product, the new technology, and the associated employment. We're looking forward to their expansion and even bringing in new products and businesses, as well as employment here in the Philippines. The concerns of the investors, as you know, our power cost is still high. We have high logistics costs. Even labor has recently been a concern. One idea really would be to develop an industrial ecozone to try to address these problems.
Well, the Philippine Economic Zone Authority seeks lower U.S. tariffs on key exports, a strategic move to protect economic zone locators from the impact of reciprocal tariffs that could disrupt trade flows and investor plans in the Philippines. PEZA Director General Tereso Panga is pushing to reduce tariffs on critical exports to the U.S., including electronic manufacturing services, automotive parts, and select agricultural products through a bilateral free trade agreement framework. Anga says focusing on preferential tariff negotiations will help the Philippines and U.S. establish a more mutually beneficial trade relationship. The higher reciprocal tariffs ranging from 11 to 50% are set to take effect on April 9th, potentially affecting supply chains and exporters operating in Philippine economic zones. On to the corporate news. Conglomerate Aboitiz Equity Ventures is increasing by 36.7% its capital expenditures this year to 104.6 billion pesos from 76.5 billion in 2024. AEV said in a recent investors briefing, bulk of this year's capital spending, or 78.1 billion, would go to power generation business, which is aggressively expanding its renewable energy portfolio. It also earmarked about 16.6 billion pesos in capital outlay for the infrastructure business. Meanwhile, ASEN Res is powering forward partnerships that push the needle on clean energy. Its latest milestone is the awarding Eurotex with the Philippines' first Powered by Renewable Energy Gold badge after the sleep solutions giant shifted 4 more facilities to 100% renewables. Eurotex sites in Metro Manila and Isabela now join 7 others across Luzon and Cebu under the Green Energy Option Program, helping fast-track the country's energy transition. ASEN COO says the collaboration fuels future synergies across the Ayala ecosystem, from green mobility to land development, unlocking innovation through sustainability. Value-added tax collections rise to 643.85 billion pesos in 2024, a sign that consumer spending remains resilient and tax reforms are taking hold and supporting the Philippine government's push for fiscal sustainability and global uncertainty. Amid global uncertainty, data from the Bureau of Internal Revenue shows that VAT collections grew 35.5% compared to 2023. The tax also accounted for nearly 23% of the 2.85 trillion pesos in total revenues last year, making it a crucial source of funding for infrastructure, social services, and economic stimulus. The Bureau of Treasury says the rise was driven in part by a policy shift in VAT filing from monthly to quarterly, which began in January 2023 and helped streamline compliance across businesses. An analyst sees a 50 basis point rate cut on the table for 2025. Market strategist Jonas Rivera says easing inflation and slowing global growth offer the Bangko Sentral more room to maneuver. Monetary Board is due to release their decision on the reverse repurchase rate from the current 5.75% on April 10. Consensus is a 25 basis point reduction. But it's not all smooth sailing. Ravelas warns of renewed peso volatility and risks to the supply chain from tariffs from the new Trump administration, even as infrastructure and election spending prop up growth.
Well, basically, if you recall, in February, the BSP governor highlighted uncertainty that kept the pause, and eventually uncertainty continues to be the name of the game at this point in time. Although with inflation at 1.8% for March, the peso last Friday was 56.82. It appears ripe for at least a quarter basis point cut. Although for the full year, I've been looking at 50 basis points up to 75 basis points if things would change. But I think 50 basis points for the year is likely this year.
Meanwhile, government's gross borrowings inches down to 339.5 billion pesos in February, signaling a more measured debt strategy amid improving revenue flows, with implications for interest rates and investor confidence in the Philippine economy. Data from the Bureau of Treasury shows this is nearly 50% lower than the 663.4 billion pesos recorded in the same month last year. However, gross borrowings rose by almost 60% compared to 213.14 billion pesos in January. Economia Advisory and Research Incorporated notes that the year-on-year drop in gross borrowing suggests the government needed less financing for February spending. The month-on-month jump, on the other hand, was driven by the issuance of global bonds, a strategy closely watched by credit markets and foreign investors monitoring the country's debt sustainability. In other news, Vice President Sara Duterte is back in the Philippines after nearly a month in The Hague, Netherlands. She arrived at NAIA Sunday night via Emirates Flight EK334. Her office says she's expected to address any pertinent matters in the coming days. The VP flew to The Hague on March 12th to visit her detained father, former President Rodrigo Duterte, who's facing crimes against humanity charges before the ICC. The VP also faces a Senate trial in the Philippines after being impeached by House lawmakers in February. Senate President Francis Escudero says cabinet officials will attend the next hearing, or Senate hearing, on the arrest of former President Duterte. That's after they skipped last week's inquiry, citing executive privilege. Hannah T. reports.
Members of the executive branch will face the Senate this week. No subpoenas needed. That's according to Senate President Chis Escudero. In a radio interview, he said cabinet officials have committed to appear at the next hearing on the arrest of former President Rodrigo Duterte, led by Senator Aimee Marcos. It's scheduled on April 10. Escudero says he himself facilitated talks between the executive and the Senate to avoid escalating tensions and a possible constitutional crisis. It was Senator Aimee who earlier pressed for subpoenas due to absences from key officials in the last probe. But Escudero didn't sign the request last week and instead referred it to the Senate legal team. Escudero says there's no need for subpoena powers or clashes over executive privilege. He adds what matters is that questions will be answered. CIDG Chief General Nicolas Torre, who led Duterte's arrest, is expected to face the panel again. This will be the Senate's third hearing on the government's alleged cooperation with the ICC's drug war probe. Hannah T., Bilyonaryo News Channel.
Onto the markets now. Philippine shares joined the global sell-off in the largest single-day loss this year. The main index shed 4.3% to close at 58.22, back below the 6,000 level. Decliners swamped advancers 201 to 32, while value turnover was a hefty 13.2 billion pesos. Mining and oil absorbed the deepest losses at 8.75%, while services lost close to 5%. DigiPlus lost 7.85%. The T Family's Metrobank also gave up 7.6%. Ayala Land dropping 5%, while Jollibee also took a 9.46% hit. Meanwhile, at the foreign exchange market, the peso is currently trading at 57 pesos and 24 centavos to the US dollar, 1% weaker than Friday's close of 56.82. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again on Monday, or rather tomorrow, as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on top.